Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, we're going to be joined by the Chief Commercial Officer, Kent Draper from IREN, to give us an update on their self-mining capacity, their expansion plans up to 20 exahash, their current ATM program, and expansion into HPC and AI verticals. We've got a lot to go through in today's presentation, but before we do, please take a second, smash the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of IREN, your thoughts on this miner compared to their peers, and outlook for the remainder of 2024. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got Kent Draper. He's the Chief Commercial Officer for IREN. Now, IREN is a company we've been covering quite some time on the channel. We've had the CEO, Daniel Roberts, on a few times. So Kent and I are going to do our best today to try and beat those views, aren't we, Kent? But we appreciate your time here today, and special interest for this episode, you guys, is really focused on the HPC AI component of IREN, which is actually the portion of this organization that Kent heads up. So Kent, thanks so much for being here. We really appreciate your time today.
Yeah, thanks. Pleasure to be here and looking forward to the conversation.
Most definitely. So this is actually your first time on the channel. As mentioned, we've covered IREN for quite some time, but Kent is new to the channel. So before we get into the AI component here, I know we will have some questions about ATM as well. Kent, can we get a quick background on yourself and how you ended up with IREN?
Yeah, sure. So my background's actually in institutional infrastructure management and banking. And that is the history of a number of our key executive group, as well as Dan and Will Roberts, the two founders. So I'd done some work with Dan previously when I was in banking, advising him on some transactions. So I've got a long history in infrastructure, and particularly power and renewables. And obviously we're at kind of that intersection between the two, as well as marrying that up with the technology side, both on Bitcoin mining and the AI HPC operations of the business.
Gotcha. Yeah, I want to get into that AI HPC because that's really become a real focal point for IREN, especially with this Poolside contract and all the news there. But before we do, we've got a couple quick updates on the ATM program you guys have in flight right now. So the first one is in terms of completion date, Kent, for the current ATM, do you guys have a timeline or an expected timeline to complete this?
We don't necessarily have an expected timeline of when we're going to utilise the remaining capacity. So our last reporting date at March 29th, we had just under 170 million of capacity left under the ATM. We've already announced, which I'm sure many of your viewers will be aware, an expansion of our Bitcoin mining activities out to 20 exahash. And that'll include data center expansion out to 460 megawatts. And that expansion, both in terms of the hardware that's required and the data centers, that is fully funded out of the ATM proceeds and cash on balance sheet that we've already drawn. So that remaining capacity under the ATM that I mentioned, just under 170 million, that is all available for additional growth initiatives over and above that expansion to the 20 exahash.
Okay, great. That was actually going to be my follow-up. That was a subscriber question. So just so I'm clear, what you guys have used of the current ATM program up until that last reporting period, that will cover the expansion, hardware, and facilities to 20 exahash. The remaining 170 million can or will be used for additional things if needed.
Yeah, that's exactly right. Gives us flexibility to pursue, a number of other growth initiatives, whether that's in Bitcoin mining or now also with our AI and HPC cloud services business, potential expansion there. So, it gives us a great deal of flexibility in terms of being able to pursue numerous things moving forwards.
Yeah, that's actually quite exciting. And I think, honestly, a lot of people were thinking we would need that full ATM to get up to the 20 exahash. So that's great to hear that was fully funded, and this is additional flexibility or leverage, or a lever, I guess I should say, down the road if needed. Now, you mentioned that the AI HPC. So this is another area. I think the next 8 questions or something, Kent, are HPC focused. To start off with, because you're kind of the expert at IREN on this subject, can you give us your outlook on this space over the next couple of years? We've seen a lot of the miners, specifically kind of the mid-tier miners, get involved with HPC. They're talking about the margins, the excitement, the potential of this space. We've now even seen Core Scientific, which is one of kind of the top producers in terms of Bitcoin per day, enter this space. Anthony and I feel there must be something very lucrative if all of you guys are wanting to get involved here. What is so lucrative about HPC?
Yes, I think there's a couple of aspects to it. I mean, everybody, unless you've had your head buried in the sand, everyone will be aware of the news over the last 12, 18 months and the enormous initial growth of HPC and generative AI in particular. And obviously, you've had some of those key early initiatives with ChatGPT that really brought this to the public's attention. But we're really just scratching the surface, even with the enormous growth that we've seen over the last 12 to 18 months. We think this is going to be a transformative thing that will revolutionize, many aspects of society. And in doing so, it's going to require incredible amounts of computing power. So that is of particular interest for us for a couple of reasons. We have built up a very large pipeline of land and availability of power within our portfolio. So we have a site down in Texas where we're currently expanding our data center capacity quite significantly this year. We still have a significant amount of land and power available at that site, as well as further connection agreements in other sites in our portfolio, totaling well over 1 gigawatt worth of power. So that side of it is particularly exciting to us because you get some of these public pronouncements like Michael Dell, for example, who said that AI may drive up data center demand by 100x in the next 10 years. And so our positioning there with a lot of access to land and power, we think is very exciting. Whenever you get these digital technologies that can grow exponentially, you still need to be able to service them using real world infrastructure. And so we see an enormous opportunity for us there, particularly because everything we've done over the last 4 years has been refining data centers that perform extremely well for power dense computing. That is our core application. We're not doing a range of traditional data center style builds. This is purely focused on power dense compute. And so our position with land and power and expertise in power dense computing, we think is very attractive on the data center side. And then more recently, with our expansion into AI cloud services, that's actually where we operate or own the GPUs and offer the raw computing power out as a service. So that's the other way that we're looking to play this trend. And that side of the business we also think is enormously exciting. We've already tripled since our initial cluster the amount of capacity that we have online, and we'll look to continue to grow that piece of the business going forwards. But certainly we'll do it in a manner where we're growing it gradually, we're doing it sensibly. But I think over the short to medium term, the amount of interest that we're seeing on the customer side is huge.
Yeah, we've talked to a few of the CEOs, including Sam Tabar at Bit Digital, and he said all of the interest for their organization has been inbound up until this point. Are you finding similar type of thing, Kent, with the relationships you guys are forging here?
Yeah, it's both a mix of inbound and outbound. I'd say in relation to the land and power, there is a lot of inbound interest on that side. I think a lot of people have been caught by surprise, given how quickly the generative AI space is growing. And many players in the industry had their own forecasts that they generated for requirements for data center space, and I think they've all been blown out of the water by the growth in this industry. And so, certainly on that side of things, we see a lot of reverse inquiries. And then in relation to cloud services, it's a mix of reverse inquiries and outbound. But as I said before, we are still seeing very good interest on the customer side. And in particular, there are a number of customers that are looking for multi-thousand GPU deployment. So, that is significantly interesting because each 1,000 GPUs is if you're looking at H100s, to use an example, from NVIDIA, that's a $40 million capital investment. So, customers of that size, it can really facilitate a lot of capital deployment over relatively short periods of time.
Gotcha. So, Kent, I want to get into some of these agreements, specifically Poolside, and start to talk about where we draw the line between a Bitcoin mining company and an HPC infrastructure compute company. But before we do, one of the questions, this is from a subscriber as well, but this is one that I've been wondering personally. How do you guys, like yourself, IREN, and the Bitcoin mining companies in general, differentiate your product and draw in customers when you're competing with giants like Amazon Web Service and obviously Google Cloud and things like that? Is it just that there's this overwhelming demand you speak of and there's not enough providers to go around, or are there actual benefits, maybe agility or size of contract or something like that, that these large-scale providers, the blue chips, aren't able to offer?
Yeah, I think, look, there is certainly, I think, a decent amount of demand, but there is actually quite a level of differentiation within the segment that I don't think people are necessarily aware of. And there are a number specifically where we feel like we're actually very well placed relative to some of the larger hyperscale providers that you mentioned. So in particular, all of our data center capacity, as I mentioned earlier, is custom designed specifically for these power dense purposes. And because it's fit for purpose infrastructure that doesn't have to perform, 20 different functions, we can actually make it much more cost effective. And so we're able to offer these cloud computing services at a pricing level that is significantly lower than some of the major hyperscalers. And, to give you a tangible example of that, somebody could buy cloud computing from us for a year. And if they spend the same amount of money with a hyperscaler, they might get 2 or 3 months worth of cloud computing service. So especially for these AI startups that are raising capital, and deploying most of their capital into compute, it's very important for them that they're getting value for money, and that's one of the things that we're able to offer. Another area where we think we're differentiated is because all of this cloud compute is being hosted in our own data centers, we can actually offer a higher level of customer service to people. Many of the other cloud services providers are using co-location services, so it's not their own data center capacity. And that means whenever they get an issue from the end customer that comes in, they effectively get on the phone, they have to call the data center company, and so they're just acting as a middleman, which means all issues take longer to get resolved, and the data centers aren't necessarily always incentivized to address issues as quickly as possible. Whereas for us, these are our data centers, it's our own staff, they're there 24/7. We can respond to customer requests very quickly. And because it is a core focus for our business, we are highly focused on customer service levels. So those are a couple of examples where we can actually differentiate our service compared to some of the hyperscalers.
Sure, that makes sense to me. And a follow up on that one around profitability. So this is another question mark in my head, Kent. Is we've heard about the very lucrative margins associated with HPC, and obviously that the build out on these data centers is more capital intensive. There's also higher requirements for uptime and things like that, which makes sense to lead into those margins. Now, my question is about the upfront capex. A lot of these contracts, from my understanding, are kind of one-offs or custom designed for the client. How capital intensive are these upfront, and what is the estimated payback period or time until profitability compared to maybe investing in mining rigs or something like that?
Yeah, so as I mentioned to you earlier, if there's 1,000 unit GPU cluster using NVIDIA H100s, that's around a $40 million capital commitment today. So the level obviously depends on the size of the cluster and the customer interest as to how much capital you can deploy. But we are not constrained by data center space on our side. The amount of electricity that these GPUs use on a dollar per megawatt basis is relatively low. And so we can fit tens of thousands of these GPUs into each one of our facilities without an issue. So the capital requirements will vary with customers, but it is significant on the hardware side. In terms of the payback periods, varies. The shorter term contracts with customers tend to be a little bit more lucrative on a dollars per GPU basis. But typically we're seeing payback periods on average around 2 years for these GPUs. And the useful life of them, I mean, it will extend, as long as you want, if you're looking after them. And as I said, our facilities are custom built to make sure that we are operating this equipment in the most optimal environment. So, we continue to see or expect after that initial 2-year payback period, ongoing stream of cash flows over many years.
Sure. I'm glad you got into kind of the life expectancy. So let's take those NVIDIA 100 GPUs for example, Kent. You're saying kind of the life expectancy would go out quite a while after the 2-year payback period. We've seen in the mining space the S19, S19 Pro, the S21, S21 Pro. We've seen quite short lifetime for a lot of these hardware units. Is that different on the AI HPC front just because of how complex these clusters are? And I use the term dense compute. Does it take longer to develop new chips on this side?
Yeah, I mean, there are chips, new chips coming out on a somewhat similar time cycle to what we've seen with ASICs. So typically every 2 years, there's a new chip that comes out, but it does take some time to get into commercial production and be seen at material volumes within the industry. And then even with the new chips coming online, we've continued to see uses for older chips. So if you look to the last generation from NVIDIA, for example, the A100, those are still used very extensively throughout the industry. Sometimes what you see is a slight change in use. And what I mean by that is often for training models, people want to be using the newest and best GPU because it means they can train their model in the fastest way possible. And speed to market for many of these AI startups is something they view as vitally important. So if they can use the newest technology and halve the period of time to train the model, that's of interest to them. But once you get into the inference stage, which is more akin to the ongoing search queries that you would put into ChatGPT when you're looking for feedback, those are often, it may be more cost effective to run them using an older model of GPU. So, we think that the overall level of compute that is required for AI and HPC is going to continue to go up. And because of that, we do see a long operating life cycle for all of these GPUs, even when a newer GPU unit comes out.
Sure. Yeah, I can definitely see why you guys are excited about this area. And I suppose on the mining front and the GPU front, the newer models are obviously going to be more compact, more efficient. They'll probably take up less space in your data center. So on the one side, yeah, you may need to upgrade down the road. On the other side, it'll help out in terms of square footage and footprint in the data centers, I suppose, Ken?
Yeah, exactly. That's exactly right. We're excited about the newer technologies coming out because our facilities right now are actually able to handle well in excess of the current crop of GPUs. So if you look at NVIDIA H100s, for example, the NVIDIA reference architecture, you need about 40 to 45 kilowatts per rack of power density. We're currently doing over 70 kilowatts a rack within our existing facilities. We're very excited by the upcoming GPU releases because our data center facilities will be able to accommodate even the newer types of GPUs with very little modification on our side. And that is one of the advantages as well of having your own data center infrastructure. Is we can actually bring online this capacity far more quickly than other providers that have to go out and source co-location space every time they want to get a new cluster up and running for a customer. So with us, it's a process of about 6 to 8 weeks to do the minor modifications that are required for these AI servers. And that means we can service customer requirements in a much faster manner than many of the other providers out there who are telling customers that it's a 6 to 9 month wait until they can get access to cloud computing. Whereas with us, it's 2 months.
Gotcha. And I guess that would be another key point of differentiation with the big players as well, right? Is that the hyperscalers just don't have that agility to wind up or down. Now, Ken, I want to talk about the Poolside Agreement specifically. I was going to ask, obviously they've upsized, they've extended. I thought it would be a good idea to talk about some of these other questions first, just to paint the picture of what you guys offer. It probably makes a lot more sense now why they've wanted to upsize and extend the agreement. What does this Poolside Agreement represent to the company? I know this is kind of the flagship partnership. What does this mean to IREN, and where do you see this one going?
Yeah, so Poolside was our very first customer in the AI cloud services segment. We had purchased an initial cluster of 248 NVIDIA H100 GPUs, and they signed up for the entire cluster for an initial 3-month term. I think it's fair to say that they've been extremely happy with the performance of the cluster. They've told us on a number of occasions that it is one of the best performing clusters that they have within their business. And they are using multiple different cloud service providers. So, that was extremely favorable feedback from them. And actually at the recent NVIDIA GTC conference, their CTO hopped up unprompted on stage with Dan Roberts, our CEO, to sing our praises, both from a reliability, performance, and customer service standpoint. So that's been extremely helpful for us, that they've been out there saying good things about us, and more than just saying it, they've actually put their money where their mouth is, so to speak, and recently doubled the size of the cluster that they're utilizing with us. And also extended and lengthened the contract. So they're now operating under a larger 4-month contract. So extremely exciting for us. For those people that don't know, they're a major player within AI. They're working on a text to coding model. So you can basically give text prompts, and the idea is that it will do the coding for you. So it's really, the aim is to democratize coding. And we think that they're going to be a very fast-growing company as we move forward, and obviously we hope to continue to expand with them over time.
Excellent. And there's no ownership stake or equity at all with Poolside as part of this agreement, is there?
No, it's just a true third-party customer style agreement where they're buying those cloud computing services from us.
Sure. And it's great to hear. It's a win-win, really, not only on the financial side that they're extending this agreement, but also that they're singing your praises like that, Kent. And you mentioned the vertical integration. I think it's clear in the Bitcoin mining world, at least, between asset light and vertical integration, you want to be vertically integrated. We've seen even Marathon, who is for a long time on the asset light side of the spectrum, they've kind of switched over and are now the vertically integrated. And you mentioned the customer service, the white glove experience. You're exactly right. People take care of stuff they own more than stuff they're renting, or if machines go down or whatever the case is. So I think that's definitely a key point of differentiation, especially if these clients are going out now in these kind of settings and saying how great IREN is, hey?
Yeah, absolutely. That's been extremely beneficial for our business, have those customer testimonials out there. And to come back to your point on vertical integration, I mean, yes, it's always been a key part of our business from day one. And one of the reasons for that is that we always have had in mind different use cases for this data center infrastructure. So everything we've done has been focused on giving us the maximum operational flexibility and the highest level of security as it relates to access to power, land, etc. Because we've always thought that these data centers were going to have huge uses outside of just Bitcoin mining, and obviously it's been very nice over the past 12 to 18 months to have that proved out. But even as long ago as 4 years, where we signed an MOU with Dell to explore AI technology, we've always been looking into these various other use cases, but the market just wasn't really there from a size perspective to make it commercially viable for us. But that has obviously changed. And I think one of the other things with vertical integration, aside from what I mentioned, one of the other benefits is it gives you the ability to scale on your own time frame. And that is always extremely difficult when you're trying to do it through a co-location model, because every time you want to expand, you have to go out and find additional data center space. Whereas we were able to control the speed of our own build out.
Yeah, we were actually talking about that on a podcast with Anthony the other day. We were hearing all these extravagant exahash targets for the self-mining or proprietary mining side of the businesses. And what we thought was so great about IREN Strategy is you guys already have everything in place. You have it's just a matter of expanding what you've already got. You don't actually have to go out and search for these. And from my experience and discussions, it's getting pretty difficult, at least in the United States, specifically in Texas, to find areas where there's good access, there's land, there's skilled resources, there's power. They're not easy to come by. Is that accurate these days, Ken?
Yeah, absolutely. I think it's one of the things that we're constantly hearing across the industry, both on the Bitcoin mining side and now more generally in the AI HPC side, is people are finding it difficult to get access to this power dense data center infrastructure, and then more generally land and power. So for us, it's always been part of our thesis is building out that development pipeline and making sure that we have inbuilt optionality and flexibility. And I think if you look at our current expansion to the 20 exahash, that's really been proved out. As I mentioned earlier, we've already fully funded that with cash that's on the balance sheet today. And now for us, because we have the land and power access already, it just becomes an execution issue for us, is getting this data center capacity built. And I think we've established a very strong track record in being able to get that done. And the other nice thing now with our AI and HPC portion of the business is this same data center infrastructure can be used for both segments. So we can build out the data center infrastructure knowing that, whether it gets used for Bitcoin mining or AI, there are a number of different use cases that we can pursue.
There sure are. And that's really a great segue to kind of the next section here, talking about how you guys internally decide where you allocate your capital and your time and resources. And me personally, Ken, my mindset on the Bitcoin mining space has really shifted. It's basically what you just said there. I used to look at these companies, these are Bitcoin mining companies, similar to oil companies or gold companies. They have one focus. They go out, they create Bitcoin. That's what the company does. Now it's seeming that a lot of these organizations, IREN is probably on the forefront of this, or at least close to it. You guys have really redefined this space as utility, power, grid, technology companies that have data centers. And it just happens to be that those data centers right now at this point in time, mining Bitcoin is lucrative, but they could shift to a number of different things like HPC, AI, or maybe a handful of other things that we don't even know about yet. Is that how you would define IREN now? Do you still consider your guys a Bitcoin mining company, or are you now a tech company that happens to dabble in Bitcoin mining?
Yeah, so I think, back to the original thesis of the company, it was very much around increasing electrification, increasing data dependency, and the requirement of access to power at large scale for that type of power dense computing, with a range of different use cases in mind. And so, for us, that has always been a focus, which, as I mentioned, has driven that vertical integration. We own the land at our sites, we own the connection infrastructure, we own the electrical infrastructure and the data center infrastructure, so that we know we can build these things in a way where we can use them for multiple different use cases. We're building high quality data center infrastructure. We're not using shipping containers or retrofitted warehouses. These are all high quality, permanent data center buildings that can accommodate these AI workloads. So I think what we've done has always been consistent from day one. And even if you look at the key management within the business, the founders and executive management, we all have a background in institutional infrastructure and power and utilities markets. So that has very much always been a key focus for us across the business. Now, we can't sit here and tell you we had perfect foresight into this, huge growth in AI. But we did always see value in the optionality around different use cases. And, so for us, I think it is an important part of the story. And also, I haven't mentioned it on any of the questions so far, but we are also utilizing 100% renewable energy, which we view as a key part of the thesis as well. Because for any of these power dense applications, as the industries grow, they attract increasing scrutiny. And making sure that your sources of power are renewable, we think, is an important part of the story. And we are seeing that, particularly now as we move into more of this customer-facing business with AI, that is something that is attractive to the customers.
It most certainly is. That's what's always interested me in the Bitcoin mining companies. There's no sales staff, there's no customer, there's no marketing. You just make it and you sell it right away, right? But obviously with HPC AI, there are customers. And that's a great lead here, Kent, because I too personally think the environmental side of this is going to become very, very relevant. We start to see the ETFs, right? We start to see institutional investment. A lot of these companies, I know firsthand, I live in Alberta. This is a mecca for oil and gas. They really care about ESG and having their brands associated with environmentally friendly companies. So how is IREN navigating the regulatory side of this, both on the AI and the Bitcoin mining front? We've seen obviously Paraguay come out and say they had concerns about mining in their country. We've had the Biden administration come out and recommend a tiered 10% tax, up to a 30% tax on energy inputs. You guys operate in Texas, which is kind of the go-to spot right now for Bitcoin mining. How do you navigate the regulatory side of this in real time while this technology is evolving?
Yeah, I mean, look, we're always maintaining an active dialogue with regulators and politicians that are in charge of the various policies here. We're operating, as you mentioned, both in British Columbia and Texas. We think that those are both, very attractive jurisdictions for us to be operating in. But we do think it is important that we are bringing a number of benefits to the communities that we operate in. We already talked about the 100% renewable energy usage. We're also able, with our operations, to support the grid. So there are many demand response functions that we're able to support. So when, in particular, if you look at the Texas market, when supply is tight relative to demand, there are a number of things we can do at our end with our operations, including full curtailment to actually assist the grid manage those periods of time. Many of the sites in our industry are located in regional areas, and so there's a significant benefit to being able to bring these kind of high-tech, somewhat future-proof jobs out to these areas. And at the end of the day, it's also been important to demonstrate the use of these data centers for AI as well, because that's a narrative that we've had for a long time, is that we are actually focused and experts on power-dense computing, and it does have a range of applications. It's not just Bitcoin mining. This is critical infrastructure for everybody moving forward. And in many ways, it's actually going to determine, national competitiveness if countries don't have access to these sort of facilities or the high performance computing that we're starting to see. So, it's always something that we monitor on an ongoing basis and, continue to try to be good corporate citizens wherever we're operating.
Yeah, and I think I really like your answer. I think the best strategy there really is just be on the offense all the time, right? If you guys are always in that group of the most energy efficient, the most involved in the community, the most engaged with your customers, or whatever the case is, regardless of the regulatory changes, you're in a beneficial position, right? So, Kent, very interesting interview today. I know I've learned a lot about the AI. I got a number of my own questions answered. I'll kick it back to you for any final thoughts or maybe any additional catalysts we should watch out for from IREN.
Yeah, I think, obviously a lot of the questions today have been focused on AI, but, want to make it very clear for us, we see it as being complementary to our Bitcoin mining operations. So this is certainly for us not a pivot away from Bitcoin mining. We continue to be very attracted to that sector. We have our current expansion to 20 exahash underway. And we see some very complementary areas between the two different business segments, and in particular, the market, I think, views the risk profile as quite different. So the ability to be able to potentially bring our cost of capital down with the exposure that we now have to AI is something that can potentially benefit the whole business, and particularly as it relates to the Bitcoin cycle. We often see as Bitcoin goes through its 4-year cycles, capital floods in at certain points in time, and everybody is getting access to capital at the same time. And that drives, hardware prices up at that exact moment. And, when you're going through the slightly tougher times in the cycle, no one's got access to capital. So actually being able to have a different business segment with a totally non-correlated revenue profile and a different risk profile, we think could actually enable us to raise capital throughout the cycle and better play, some of those Bitcoin cycles that you see and take advantage of that. So, we do view them as being complementary, and very excited about the future and the pipeline that we built up in terms of access to land and power and our own development sites is really allowing us to take full advantage of these opportunities that are now presenting themselves. So very excited.
Yeah, it's recurring revenue, it's non-correlated, and there's no halving in HPC. So what's not to like about that, I suppose, eh?
That's right.
Excellent. Well, you know what? We really appreciate your time today, Ken. IREN, I got to tell you, is one of the most requested, followed companies out there right now. Huge amount of our subscribers are interested in this one. So hopefully we can do our best to beat Dan's last podcast. We look forward to having you guys back again. Keep up the great work. You guys, if you're still watching at this point, make sure you hit the like button. It helps get this content to other people who may find value. Subscribe to the channel. And if we didn't get to one of your questions in today's video, leave it in the comment section. We'll be sure to address it in the next update. Ken, have a great day. Thanks so much. We'll see you soon, guys.